Welcome back to the Wall Street Podcast. This is The Deep Dive, and today, September 12th, 2025, we're digging into the latest reports from the Wall Street Journal. We'll pull out the key insights on market dynamics, corporate strategy, and the growing reach of tech and policy shifts. A sharp overview for you.
Exactly. We're looking at how these diverse economic signals are sort of interacting and the strategies companies are using, plus some surprising ways AI is changing, well, foundational industries. It's about seeing the currents underneath the surface.
Right. I was looking at the market data this morning, and honestly, it feels like a real tug of war. You've got the Dow Jones cracking 46,000 for the first time ever, and the average 30-year fixed mortgage rate down to 6.35%. That's the lowest in almost a year. Sounds pretty good.
It does seem positive on the surface, but then you look at the August CPI numbers, up 2.9% year over year, and the core measures up 3.1%. Still sticky. And initial jobless claims jumped, didn't they, to 263,000, highest since October 2021.
So these bullish market signs are clashing head-on with stubborn inflation and, well, a labor market that looks like it's softening.
Yeah.
How are markets actually reconciling this? It seems contradictory. What's really driving things?
Well, a big driver, especially for the Dow's climb and the, 22% jump year over year in mortgage applications, is the market betting on the Fed cutting rates soon, anticipation. But, that mix of still high inflation and weakening jobs, that's the headache for the Fed. It hints at potential stagflation, which really complicates any policy moves they might want to make.
That's a very tough spot. Is the market maybe getting ahead of itself on those rate cuts? What if inflation just doesn't cooperate?
That's the risk, absolutely. The market's priced in certain hopes. If the actual data doesn't back that up, we could see things shift pretty quickly. The Fed's path is definitely not set in stone.
Okay, moving beyond the macro view. Corporations are also making some pretty bold moves. Let's look at corporate strategy. AbbVie, for instance. They struck a deal to keep Rinvoq's patent protection going until, April 2037? Projected peak sales are huge. $19 billion worldwide.
And then there's the media space. Paramount Skydance getting ready for a majority cash bid for all of Warner Bros. Discovery. That's a company with nearly a $33 billion market cap. We're also seeing Noba Bank plan a $3.74 billion IPO in Stockholm, and Kroger actually raising its outlook on better grocery volumes.
So what's the underlying strategy here? Why these specific big plays in pharma, media, banking? What's the long game?
Companies are definitely playing the long game, making aggressive moves to secure future value and, position themselves better. AbbVie's patent deal, that's about protecting a massive revenue stream from generics. Pure defense, but vital. Paramount's bid looks preemptive, trying to consolidate those media assets before a bidding war starts, maybe. And Noba Bank's IPO, that's a calculated step to get cheaper debt funding, support growth. It's proactive capital raising. It's like watching high-stakes chess, really. Every move is about that long-term position.
Speaking of calculated moves, let's shift to innovation and AI. It's everywhere. Apple just rolled out that shockingly thin iPhone Air, very focused on style, fashion. And Ralph Lauren launched Ask Ralph, an AI stylist built with Microsoft and OpenAI.
Yeah, those consumer applications get headlines. But what's maybe more interesting, economically speaking, is how AI is embedding itself into basic infrastructure. Think beyond fashion. Look at oilfield service companies like Solaris Energy Infrastructure. They're pivoting, starting to provide modular power systems for these incredibly power-hungry AI data centers. Solaris actually signed a deal with xAI, Musk's venture. That's a significant sign.
That is a big shift. So forget the slick apps for a second. Where's AI making a real economic dent and maybe opening up unexpected investment angles?
Right. It's that integration into core infrastructure.
Right.
Ralph Lauren's AI stylist. Nice for customer experience, sure. But oilfield services powering data centers, that tackles a huge practical problem. The need for massive amounts of quick off-grid power for AI. For investors, this is seen by some as an inexpensive AI play if you're bullish on data center growth. It shows AI's impact goes way beyond traditional tech sectors. It's almost a new kind of gold rush for power this time.
Okay, let's bring this down to the real-world impact for you, the listener. That drop in mortgage rates we talked about, it has a direct effect. Let's say your housing budget is $3,000 a month. At 6.35%, you could theoretically afford a $466,000 home. Compare that to 7%, where it was $442,500. That's a noticeable bump in purchasing power.
And that increased power likely contributes to that 22% rise in mortgage applications we mentioned earlier. However, and this is a big however, home prices are still stubbornly high. Plus, all the other costs of ownership keep rising. So widespread housing affordability, still a major hurdle. It suggests any recovery in the housing market will likely be gradual, not some sudden correction. Affordability is still, well, a long way off for many.
So wrapping up, these trends really highlight a moment of major economic adjustment, strategic shifts across global markets.
Exactly. And understanding how all these pieces connect is, frankly, essential for anyone trying to navigate what's ahead.
Indeed. Something for you to consider. How will these forces continue to shape your own investment approach and market view moving forward? What opportunities or perhaps challenges do you see?